Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the fancy corporate speak, and sometimes find out if companies are truly driving towards success or just spinning their wheels. Today we're looking at Rivian Automotive Incorporated's 2025 annual report, and let me tell you, it is a wild ride with its share of bumps and maybe some exciting new roads ahead. Before we dive in though, if you love getting these clear, no-nonsense explanations of financial documents, make sure you hit that subscribe button. And hey, we've got a fantastic and growing community over on Discord ready to decode even more. The link is in the description below. Come join us. Alright, let's get straight to the numbers. Rivian's 2025 report paints a picture of a company heavily investing in its future, and that of course comes with significant costs. For the full year 2025, Rivian brought in a total of $5.387 billion in revenue. That is up from $4.97 billion in 2024. So on the surface, things look like they're growing. But let's break that down. Within their automotive business, revenue actually dropped from $4.486 billion in 2024 down to $3.83 billion in 2025. That is a 15% decrease, meaning they sold fewer cars. The report says this was partly due to tax credits expiring. Think of it like a sale ending, and customers holding off on buying. The good news is their software and services division really took off. Revenue here jumped from $484 million in 2024 to a whopping $1.557 billion in 2025. That is more than a triple increase. This segment is becoming a much more significant part of their overall business. Now here is where things get really interesting. For the automotive side, the company went from a gross loss of $1.2 billion in 2024 to a gross loss of $432 million in 2025. That is a big improvement, almost cutting their automotive losses by more than half. Meanwhile, the software and services segment flipped from a small gross profit of $7 million in 2024 to a much healthier $576 million in gross profit in 2025. This shows how profitable that software side is starting to become compared to the car manufacturing. Despite these improvements in gross profit, the company's overall net loss for 2025 was $3.626 billion. That is better than the $4.746 billion loss in 2024, but still a substantial loss. It means they are still spending a lot of money to grow. A big part of their strategy is cutting costs, especially in car manufacturing. They talk about getting more efficient as they produce more cars, particularly with their new R2 model, which is expected to ramp up production. They're aiming to get their per car cost down, which is crucial for long-term profitability. Rivian is making some serious investments in its future. They're building out a new factory in Georgia and expanding their existing one. This means a lot of money is going into property, plant, and equipment. You can see that property, plant, and equipment net almost jumped from $3.965 billion in 2024 to $5.119 billion in 2025, showing a huge investment in their factories and equipment needed to build more cars and develop new technology. Looking at their cash, they had $5.294 billion at the end of 2024, but that dropped to $3.579 billion by the end of 2025. They are using up their cash reserves as they invest heavily. Their total liquidity, which includes cash and investments, also decreased from $9.063 billion in 2024 to $6.588 billion in 2025. This is a sign that they are actively spending money to fund their growth and operations. A significant development for Rivian in 2025 was their joint venture with Volkswagen Group. This partnership is all about developing future car software and technology. Rivian received a substantial investment from Volkswagen Group, including $750 million in stock. This is a big endorsement and brings in much needed capital, but also means more competition down the line as Volkswagen will use Rivian's tech. Of course, with all this technology and data, cybersecurity is a huge concern. Rivian acknowledges the risks of data breaches and cyber attacks, stating that while they've had incidents, none have materially impacted them yet. But the threat is real, and a major breach could be incredibly damaging. Building these massive factories isn't easy. Rivian mentions facing risks related to permits and approvals for their facilities, and the environmental regulations that come with manufacturing. Any delays or issues here could slow down their expansion plans. Now, let's talk about the stock. The report clearly states that Rivian's stock price has been, and likely will continue to be, very volatile. This means investors need to be prepared for big swings, regardless of how the company actually performs. They highlight many factors influencing this, from company performance to broader market trends and even analyst ratings. Overall, Rivian is in a major investment phase. Their software business is booming and showing real promise, but the core automotive business is still facing challenges and significant losses. They are spending a lot of money to build out their future products and factories, especially with the upcoming R2 launch. The Volkswagen partnership brings in cash and strategic advantages. but also hints at future competition. The company is definitely making strides compared to previous years, especially in improving their gross profit margins, but they are still burning through cash. It really comes down to whether their massive investments in new models and technology will pay off and lead to profitability. The road ahead is still pretty uncertain. What is your take on Rivian's strategy and these latest numbers? Do you think they're on the right track to overcome these challenges? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out, and of course, subscribe for more corporate deep dives. Don't forget to join our Discord community in the description. We'd love to have you decode with us. Thanks for watching, and we'll see you in the next one.